All right, welcome back to another installment of the weekly review video series on this channel. This is the weekly review for the week ending August 21st, 2026. Why do we do weekly reviews? Well, Saturday is for reviewing the week that was, and Sundays are for reviewing the week to come. So just a quick overview before I jump over to the charts. In FX, we did have our classic buy sell candles as predicted. Those candles slammed into the key levels. So generally the theme was we didn't really have a whole lot of chances to buy below the open or sell above the open. It was basically just complete continuation into some pretty intense key levels. So I'll talk about this when I do my planning the week to come, but the overall setup of just how bullish or bearish these candles were, that's going to analysis for next week. Gold and silver, same thing. You had a lot of continuation, and especially into the end of the week. And Bitcoin was a very, very, very bullish week, and I think it counts as a surprise candle. Though, if we were really watching Bitcoin, we might have been able to catch this, and I could show you. So when I trade Bitcoin futures, if my prop firms, I can't even trade the full-sized Bitcoin contract. I have to trade MBT, which is micro Bitcoin futures. So to buy one Bitcoin, I have to buy 10 MBT, which is extremely cost inefficient. It has insanely wide spreads, and I have to pay at least $50 per singular Bitcoin. So if I wanted to buy 10 MBT, it's like $50 or $58 worth of commission. I can't remember, but it's not great. It's not great for day trade scalping type stuff. That's the other method or mode of operation that prop firms force you into. And then we're also going to look at crude. So I didn't have a crude oil call last week. I kind of was looking at it, was kind of in a wedge, but it was bullish, and natural gas was bullish as I predicted. Okay, so let's get over to Brave here, and we'll go through the charts. So before I get into FX, I just wanted to point out the one of the big fights here. This is the U.S. 10-year yields, and Scott Bessent, U.S. Treasury Secretary, this is a metric that is being watched very closely. There are many markets right now that are being actively influenced. I think manipulation is kind of like I think we should reserve the word manipulation for our technical suite. We shouldn't use manipulation when it comes to governments, when it comes to market makers. I think the word manipulation has like a very, we should keep, we should only use it in the context of accumulation and distribution, right? So anyways, but generally, I think if this were just an untethered market, that we probably would see higher rates. And I think that, but there are many levers being pulled right now at some pretty high levels. I'm talking the U.S. Treasury and other the primary dealer banks, and there's some mechanisms going on that is essentially trying to keep this constrained, keep this move, keep this from breaking out, and that's kind of the balance point. And when you look at one of the levers is actually foreign FX. it's easier to buy dollar denominated debt if your own currency is appreciating versus the dollar. Um, you get a positive FX swap over that time horizon. So when we and sorry, I was kind of already annotating that for my slideshow for tomorrow that I was working on. But let's just go back and review where we're at in the euro first. So this little configuration right here, with this being the origination candle and the open of this candle, which is, these are 2-month candles, and forgive me that this seems awkward, but it'll all make sense. What I try to do is I try to resolve it's a wave function, right? Or it's actually part of a wave function more specifically, where I try to have a swing low or essentially some sort of important low that gets taken out, and then I advance it forward until there's the next important low, and overall the thing that I'm looking at makes a range, right? And that thing is the accumulation into peak manipulation. It makes a range, and then the peak manipulation tests the range, forms the false market structure shift, and forms the turtle soup. In this case, it's a bullish turtle soup. And then I'm expecting 3 follow-up candles of distribution. So in other words, with the Euro USD Forex pair, if this is the origination candle, which is the first candle in my range, there are 7 candles in the range, right? And the 7th and final candle is the peak manipulation candle. Then the phase switches, the market conditions switch from accumulation into manipulation to distribution. And so now we're in the distribution phase, and we have been since July 1st, I would contend. And this week's price action was further evidence that we truly are in a really healthy distribution. Now, the very first 2-month candle in this distribution phase is set to expire or finish at the end of August. And in the euro itself, I really don't expect too much ground to be gained to the upside before the end of August. I mean, I'm not saying it won't happen, but I actually think that it might be a little bit lower probability to expect yet another intensely bullish weekly candle to follow this one. I could be wrong, however, but let me show you a little bit of range analysis, like intra-range analysis. Oh shoot, I'm getting into my planning the week to be, aren't I? So let's not do that. So a key level that was targeted for the week that was, which is this singular weekly candle, and notice the open. So this open was difficult to trade because price never was allowed to get below the open. So if you were a euro bull on Sunday evening, you only had that little teeny wick, which is essentially a micro pip. Well, was it even a pip? Let's measure this little guy. Yeah, so it's like 0.9 pips, so it rounds up to a pip. But still, it's 2 futures market ticks rounding up. I mean, it just it's not a very satisfying. It certainly doesn't approach a harmonic of this pair, which is 35 pips. But yet you can see that. Oh, I'm sorry, I was looking at the wrong candle. It's this candle, and so we didn't even get a pip. It just opened on Sunday night with a bullish move, and that was after a kind of like a CRT, right? Or actually, so this was a 2023 model that played out, probably on the 8-hour time frame, I'm guessing. So like Friday, you could treat that as the origination candle. Thursday's daily candle. Here, we'll go to the 8-hour chart and I'll show you exactly what I mean. So this was last week's trade in the euro. Not the, sorry, the previous, the week before last. So if this is the origination candle, maybe a 12-hour. Yeah, it's this one. So yeah, this played out actually. Yeah, that was another reason why I was bullish. I remember is because you could use this entire range, and then maybe it would be a daily. Yeah, so if you use this entire range here, and then that's the peak manipulation into distribution. Friday was distributional. Then Monday is expected to be distributional, and obviously we've already cleared the range. So those 2 days of intense distribution were likely sufficient to basically like check this box and say, yep, this 2023 model has played out. It's played out ahead of time. So now it warrants this insanely low volatility Tuesday. This almost looks like a banking holiday day, but I don't believe it was. There wasn't. I don't think there are no U.S. federal holidays in August. But anyways, it's this pause. So in hindsight, I know exactly why this pause was the way it was, coded the way it was on the daily chart here. Scott Bessent released his quote unquote surprise liquidity treasury, saying, he's going to use the treasury to buy back $4 billion of the longer dated U.S. treasuries, just to free up the liquidity. What they do is they target illiquid tenors and illiquid maturities and issuance cohorts in these long bonds, and they're simply just buying them back to keep the market liquid. It's basically like they're doing the job of the dealers, the primary dealers, which are the big bond buying banks, the banks that are allowed to participate in the direct off the run bond issuances, and they're doing their job for them, or they're helping them do their job. But I would say it's the equivalent of them helping, because it is like a rounding error. There's like $1 trillion of more than, I can't even remember. It's like some crazy trillion amount of the 10s and the 30s. And when Bessent says, oh yeah, it's 4 billion, like what is 4 billion to, or an increase of 2, we'll call it, what is that amount nominally to the, it's totally insignificant, but it's the matador, right? It's the gesture, the sheepdog, right? Effect on the market. And that was important to be the excuse. I think it's basically an excuse to justify this rally here. Now, this is a really interesting little pattern here. Notice that this is not 2023 whatsoever, right? There's no way. I mean, you could drill down, you could play this game, and I don't play this game, but you could play a game where you drill down to look at this on the 1-hour chart, right? So is this fair value gap my origination candle? What is my origination candle, right? This is a 2023 bullish setup, right? But it's a terrible one. And right here, this little pause fractal is also a little baby 2023. And what do? Do you get long here and then you get out, right? Why is this a butterfly flapping its wings type situation into Wednesday, right? Why is it? Well, there's something special that happens in ranges before a key level is hit. And in this case, the key level that we're looking at to be hit is the 50% of the range. It's the equilibrium of the range, right? So what kind of chart configuration or what kind of pattern can we expect before a key level within our range? And that's either, and it's got to be like a really important key level. It's got to be the 0.5, the 1, or maybe the 0.6 1.18. And I'll kind of explain why I believe this in a second here. But this actually, even though it doesn't look like it, this is a daily CRT. So Monday being candle number 1, and you might be shocked to hear me say this, that all of a sudden I'm using CRT analysis, right? Why did I switch over to CRT analysis? Well, there's a reason for that. Tuesday was candle number 2, and Wednesday was candle number 3. There's a 3-candle daily CRT, and this is Romeo's butterfly flapping its wings CRT, where it's a complete expansion of the original candle 1 range into the key level. Now, we don't really quite hit the key level on the exact candle 3 in the euro, but let's look at the pound really quick. So I'm going to go ahead and actually, you know what? We'll switch over to the pound, because I think it's, I guess we don't really hit it in the pound either, but well, we do hit that key level. But anyways, look at what the pound did. The pound was far more bearish than the pound didn't have a Monday like the euro did, right? The pound's Monday was much more reticent, and then because I believe that they were look what they were trying to do. They're literally trying to sucker in aggressive bears on the pound from the top of that range. And then we get a 3-candle CRT in the pound that is more textbook, right? Because look at this. Candle number 1, you buy in the wick below the candle number 1. It's a turtle soup of that low. And then candle number 3, we extend past the low yet one more time, and then we get our continuation into our distribution, right? Or sorry, peak manipulation, and then we get our distribution in CRT speak, right? And so did we have a 1 hour model number 1? Of course we did in the pound, right? And we even had that in the euro too, but the euro is much more subtle, right? With the euro, you have to understand that the low of Monday's low, which is Monday daily candle low. Here, I'll go back. I think it was there at 2 p.m. Yep. So that's an SMT. Okay. So that SMTs are very powerful when they occur across days. So when you have a Monday low in the euro, I'm sorry. That's not the low of Monday. It's this. Yeah. Right. Because daily chart. Yeah. Yes. Yeah. Jeez. Not. Please forgive my little clumsiness there. So back to the hourly. We do get a model number 1. So this is a kiss of death CRT. This is a kiss of death CRT. Absolutely, 100%. I'm positive. I'm positive because of the price action on Friday was. I'm gonna do a please fix thanks video because I saw a couple CRT traders actually on YouTube. I saw not on YouTube. Well, one was on YouTube and one was on X on Twitter. So I saw a CRT trader. Well, he was actually trying to get. I guess they were both trying to do the same thing. I think they expected Friday to be a complete bearish CRT. So I guess they're both making the same mistake. But I'll do a please fix thanks video on Friday. We did Friday was like both Thursday and Friday were basically like Thursday was like talk about a kiss of death CRT. Thursday was like a fractal kiss of death CRT into the actual key level. Like Like it was Wednesday's daily candle CRT that got us there. And then, Thursday is like this, price is fractal, right? So like a kiss of death actually has a kiss of death within it. I mean, you could look at the pound on Thursday into Friday again and probably see another another similar setup. Like it could be like a 4-hour CRT into the 4-hour CRT kiss of death into the key level from Wednesday into Thursday. Something like this. Yeah, I mean it's definitely definitely kiss of death style, where it's like it's really not letting you get a 2023 model to get in for the full move of the week, and it's really not letting you get a healthy looking 2023 model into the high, into the actual key level. So like a kiss of death and then a smaller time frame kiss of death, in other words, is what we saw. So yeah, like definitely like bullish week, and I'm glad I called that in the euro and the pound. I didn't trade this as much as I should have. I didn't, but I traded a little bit of gold and traded a little bit of natural gas, which we can get into next. So yeah, let's get into. Let's tell you what. I'm gonna make a please fix thanks video on Friday in the euro. So I'll if you wanted me to review, or if you're waiting for a review of the price action on Friday, I'll cover that in the please fix thanks video. But yeah, I think I got it. I think we got the weekly candle reviewed here in both the euro and the pound. And then now let's move to gold and silver. So gold and silver was the same. This is the 4-hour. Yeah. So let's go back. We'll go back a little bit. I actually I was wrong in my prediction for gold. So I was expecting gold to I think I was expecting gold to be bullish into this key level, and then not as bullish as it was later in the week. But then again, I didn't really know. Obviously, I didn't know that this week was going to be the week that you'd get that Besant surprise. Not that, I mean, there's some flaw in my analysis there that I was, but anyways, early in the week price action in gold was a lot more textbook than in the euro. So this is more like what you saw in the pound, where you have more of a textbook weekly constellation. A little bit tricky here with gold's. So yeah, and it's a tricky CRT because our peak manipulation is actually on the third candle. So if you think of like, it's actually kind of a two candle CRT, isn't it? Between these two candles. So I guess it's fine. But it's a 2023 model, right? Like yeah, I mean, it's a little bit tricky. Yeah, no, it is a 2023 model. It's a little bit of an awkward one, but it still is. On the daily, right? Because it's like 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah. So it's like you'd expect this candle to be a activate a 2023 model, and it did, because it distributed like within the range. Right, so we got to our halfway of our range. We got to our 618 and even our 786. But we pause for, kind of Monday was like a little bit of a distribution off of this low, and then we have this pause on Tuesday. And now we know why. We all know why there was a pause on Tuesday as preparation for the Besant news drop. It was 8:30. It was like 8 or 8:30 in the morning on Monday. But definitely in the hourly time frame, I think is going to be pretty instructional. I don't know. There's a little baby scalp I did apparently on Asia on Tuesday. Um, but yeah, so you can see that there was the 7 o'clock candle and there's the 8 o'clock candle. And you get this huge move higher. Oh, but this is itself a 2023 model that kind of butterflies into and that's, I was looking out for that's the 50% of the entire range, and I was looking out for higher. I was expecting gold to kind of be more reticent and more like grind a little slower, but they sprayed gasoline on the fire here, in liquidity terms. So let's see. So what do we see here? What do we see? So this, I could say the same thing about the gold and I could say about the euro now that I'm really looking at this. This really is a 2-candle CRT kiss of death into the key level. It fits, that narrative fits a lot more than basically saying that, yeah, like this is a 2023. This is not a 2023 model because of this low. This low spoils the 2023 model from occurring on the daily time frame. So this really is a 2-candle kiss of death. Now, this a 2-candle CRT kiss of death. Pretty hard to trade, pretty hard to predict unless you're really bullish on gold. Going back and zooming out a little bit, we looked at the time frame in the euro. My time frame in gold is very similar. So actually, should that be? Anyways, I'm bullish on gold for, well, we're definitely past the halfway point of where you could say where you might look to be expecting the distribution. Previously I actually wasn't expecting this high to be taken out, and I think that's another reason why I wasn't as bullish on gold and silver. But now that we've made such healthy moves, and obviously this is a 2023 model that we're looking at, right? I believe it's on the 2-week. It's on the month. Yeah, so those are some notes for later for the. But yeah, no, it is. This is a monthly time frame, and so if you call that candle there peak manipulation, it's probably safe to assume that we really have one more month of distribution, and that's, yeah. So that now that it's interesting how when you're doing these analyses, you get a lot more clarity as you get deeper into the distribution. As far as, like, I knew to look for a 2023 model to get bullish precious metals, but I didn't really know what time frame it would resolve itself, because obviously we're really bearish in a really inefficient way, and we need time for the market to move, or we basically have to take out this internal liquidity at some point. So it's this one big awkward candle, but the look back goes all the way back to here as the origination candle, and so there's 1, 2, 3, 4, 5, 6, 7, 8 months and then this is actually distribution candle number 1, even though it's a doji, and then this is distribution candle number 2. And then next month will be distribution candle number 3. And you can see that, on average, we would expect this candle's highs to take out about a third of a third of oh, I'm sorry. Jeez. So I've got this drawn a little bit weird, don't I? So if it's this range, let's draw our fibs correctly here. Maybe that's why I was, yeah, okay. So I was drawing the fibs a little bit wrong there, and I think that's probably why. Jeez, I should really pay attention to my higher time frame analysis. Learning in public here, it's fine. So just take, take my, learn with me together. Don't take me as a mentor, please. Take me more as like a study, a friend, a helpful person. I'll respond to your comments if you ever comment on these videos. Yeah, use me as a resource. Don't use me as a mentor though, please. And then, yeah, that is actually a better system to look at this. So yeah, so it now that I see this, I actually think we'll probably just target 5,000 even for at the end of we'll target the 5,000 even per troy ounce key level by the end of September. So by October 1st, it's looking like with a 3-month distribution there. So that would explain gold's more aggressive than what I was predicting, bullishness. So yeah, so we'll be looking for this weekly FVG as a bearish reversal in gold due to primarily liquidity concerns. And this weekly candle FVG will probably actually get taken out now because it's got a key level. They might do a thing where they actually won't take out the key level. Like they'll find a reason to like reverse off of this high within this week, still within the same weekly FVG. Maybe use this as this little candle body as a bearish breaker. Though that would allow us to get back into there. But anyways, it's not really important now. I'm getting into planning the week ahead, aren't I? I shouldn't do that. So reviewing the week that was, this swing high was obviously the weekly target. It's so easy to see these in hindsight. So that weekly high was the target. And again, it was the target for a kiss of death. So not necessarily a 23, a 2-candle CRT kiss of death, and then a I mean, I traded this. I should really know. I think here we just get another. We get another kind of like a. I mean, like how low on the time frame should you really go for looking for these 2023s in a trending market like this, like a real steep trending market? That's a great analytical question. But I was finding my way through price. I think I was more looking at gold and silver and like looking at key levels. Silver was having all these cues. So like the really helpful thing with silver was like it would pull up to, so first of all, this was a data wick high from CPI that was left for like an ungodly amount of time. Like here we have a data wick high from CPI from Wednesday, August 12th, and it doesn't get taken out until the following Wednesday. So they leave it for an entire week, which is pretty incredible. Silver had a really bad Tuesday compared to gold. Silver was really selling off on Tuesday. Silver gives us a beautiful textbook 2023 model. I'm hoping you can just see it visually here, but like there's your origination candle, and there's into your peak manipulation. And then when it distributes, and look at it, it's like a nice round number. It's like 44-hour bars, right? And so that's going to give you precisely 12 candles, 12 4-hour candles of distribution. No need to do any rounding there. And that's exactly what we got. So isn't that awesome that you get, and this is, I think that actually is what gave me a lot of confidence with gold and silver, is that you get the 2023 model, and then the first third of the distribution. So it's like the first, well, almost the first third. No, it is. It's exactly the first third. Like if you're expecting 12 candles of distribution, we'll call it, it's a fence post, it's 13. Anyways, so this is your first distributional candle, assuming that one's the peak manipulation, which it is, right? Because that's the swing low. This is the first third technically of the distribution. So in other words, if we resolve this is 12-hour candles, and forgive me that this is awkward, but the first 12-hour candle actually takes out the entire range, right? I know I don't know if you've ever heard this term, but it's a God candle. And forgive me if you're not if that's, if that phrase is, anyways, nobody's actually going to listen to this video, so it's fine. I don't have to really cover my butt here, but I've heard a lot of traders, I've heard Dodgy call this a God candle, right? In other words, it's a singular candle that takes out an entire range, right? It's not just a bullish engulfing candle for like this candle, right? It takes out the entire range. It's the entire 2023 model distribution phase in terms of price in one candle. So price is, check that box, right? But we still have time. We still have 3 more 12-hour bars of distribution planned. And if you go to the lower time frames, it even looks even more generous, to where you could probably include that candle, that last, the Thursday Asia 4-hour candle, the Thursday Asia Open 4-hour candle. And so I knew after this point not to look for a higher time frame 2023 model. I knew that our momentum was such that I should really just be looking for these little baby lower time frame CRTs into key levels. And silver did such an awesome job at this. Like silver, it was $69 per troy ounce silver even, where this wick right here doesn't quite get to it, like the swing high. And so to get long with a CRT, and bang, it takes it out. And then again, 70 did the same thing, where the high of this 4-hour candle didn't get to 70. It got to like 69 and 92 cents. And then bang, another CRT to take it out. So some really easy trades after this initial candle. So yeah, that's precious metals, natural gas. Natural gas had a similar setup. Actually, no. So natural gas wasn't similar. Natural gas, obviously, man. So natural gas was really interesting. Like it had the response to Besant's quote unquote surprise Treasury liquidity news at 8 a.m. Wednesday morning, but it didn't. It used it as a turtle soup, a bullish turtle soup of that range, and then you get a 2023 model down into the 50%, and then there was a little tepid grind higher. Typical pause. This is like, I feel like natural gas is just on this in this kind of like pause model, grinding higher. Now, with natural gas, I am expecting about 26% price appreciation over the next, what is this? Is this a two week? Yeah, it's a 2-week 2023 model. So natural gas, I do contend that it's a bullish 2023 model. So this trend line is essentially a just price is going to wiggle around it and just slowly rise higher. And there's going to be bullish turtle soup, bullish CRT, bullish CRT. So yeah, that's the contention. And so just going back, like this weekly candle was a classic buy weekly candle. Early on, it's kind of funny how it the high was actually like into that surprise news, and then it was like Monday into so you had this you had a daily 2023 model that was distributing, and then it just exhausts itself, right? And so it's this one thing where because of Wednesday turn into that doji, then you're like, okay, well that is actually a bearish 2023 model, with that being the origination candle on a slightly lower time frame, like probably on the 12-hour, to then be suppressed or then to be short in a more constrained way. Like I don't think, like overall you're bullish, so you're not expecting like this 8-hour 2023 model to fully play out, but you are noting it and you are letting it seep into your analysis and just saying, okay, well, we're going to wait for yet another, to probably another 2023 model, using that as the origination candle or using more interior origination candles as we slowly grind our way up. Natty gas is boring. Man, I didn't realize how boring it was, and it's harder to trade. I mean, if you look at the minute chart, you can just see how illiquid it is. Like it'll just kind of like pause for a long time. It doesn't really have like, just to compare and contrast. Like look at the euro on the minute chart. Like the euro gets all these little micro adjustments and all these little wicks, right? Look at the CFD for the Nasdaq on the minute chart, right? Or actually, you could probably look at the full NQ futures and it would still be pretty nice. Anyways, okay, phew. So that's and then we'll look at crude. I didn't actually trade crude all that much. Actually, once I realized what crude was up to, I did have a crude long. I can't remember which weekday it was. Okay, so we'll go back and look at crude. So I was really disappointed. I don't know if disappointed is the right word, but like look at the weekly close on Friday. Like this little wedge here was just, it was yelling at me with crude. Like I was just looking at that and like, we're at equilibrium of like several ranges and we've wedged. And so, I didn't know if crude, they were going to be able to successfully suppress crude a little bit lower here, but boy, I mean, Iran is heating up. We're getting further away from an agreement, a peace deal, rather than closer. And we're getting a little bit more violent, just in terms of the Middle East in general. And not even with Iran, just like, like with Israel and Turkey and Syria and yeah, I mean, it's just, and the Houthis, I mean, it's just a little bit of a, we're the burner's on and the water's getting ready to boil. And so, yeah, Monday was a bullish candle, and I think this is what was getting me excited. I think it was Thursday. So I did, and honestly, it's like sometimes you're good and sometimes you're lucky. I think catching Thursday's move was I chalk it up to luck, but I think I was just using like an internal 2023 model to catch this. Though now that I'm looking at the 4-hour chart, I'm like, what was I really seeing? Maybe I was looking for like a CRT, kiss of death type of situation. They do want to start papering over, like they do want daily closes. Like Thursday's candle, like if you look at it in hindsight, the body of Thursday's candle and also the previous Thursday, it starts to paper over, and we should really be doing this on the daily chart. So I guess it doesn't really paper over it all that much. But yeah, so anyways, crude is bullish, and so now that we've broken out of this wedge, and I'm looking at, there's a lot more geopolitical clarity with Trump. So Bessent had a big announcement, and then Trump had a big geopolitical announcement. He called it the economic D-Day. The economic D-Day. Now, part of the economic D-Day is to not allow crude to get to 165, which I was talking about this last week, that 165 is like the break even. But the other part of it is that we're not going to, it's a war of attrition now, and we're not going, it's economic attrition, and we're not going to reach a deal. We're not going to be looking for a deal. So those two factors in place support this. Oh, and let me just hold off. I'm going to hold off on that because I'm getting into my planning the week to be video. But this actually was important in terms of reviewing the week that was. So let's look at crude again, and we'll look at, it's actually a 6-month 2023 model that we're in right now. So if you're looking back at hindsight and you're like, why did price just randomly break out of that wedge with no real like indication of bullish or bearish? Well, from a technical standpoint, it is important that we did break out of that wedge at that moment, because what we have here is a 6-month model playing out, a 6-month bullish 2023 model that is targeting the all-time highs. Actually, is it a 6? Yes. And so, and what did I say? Was I down? I was just looking at this. And then within that, we have, we have another model with that origination candle, don't we? Or do we or don't we? Let's see. No, we don't. Okay. So this one has played out. This one was successfully suppressed. It had its well, it's technically a 2-week. 1, 2, 3. Yeah, but this one was successfully suppressed. So good job, Bessent et al. But there's a longer time frame model. We're still in the 6-month model. Like the 6-month model is still going to play out. And so you can still draw a trend line from back to the all-time highs, but it really will work like a pause CRT. It obviously of this candle, I had it, I think, on the weekly. So if you go, I think it's like if you go, let's see, we'll draw our swing low. Yeah. Okay. In March of 2021, that little swing low right there, you draw your candle to here, 250 bars, right? Nice round number. Okay. And then you go 250 times 0.3. Because remember, it's a 10-to-3 ratio, right? That gives you a predicted 75 weeks. Okay. So you can put me in the camp for oil getting back to all-time highs, or at least being bullish. Let's be bullish until the second half of 2023. In other words, or sorry, the second half of 2027. So it really is a 6-month candle model, right? Because there are 3 6-month candles here. Doing the math, right? I'll show you on the 6-month chart again, now that I have it all drawn out. 6-month candle, boom. Yeah. Here we go. So 10 and 3, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you call that's peak manipulation right there. I think that was a low. Okay, well in Brent it was low, maybe in WTI it wasn't. It's clearly not the distribution candle, right? Down close candle. And then clearly the beginning of the Iran war, which was and Venezuela, all the little shenanigans, geopolitical shenanigans of the Trump administration in H1 2026, right? In the previous 6 months, right, was this candle. And then now we're in this candle right here. And obviously you're not expecting these highs to get taken out within the next 6 months. Though if they do, it's okay. It still follows. But we're expecting price to generally adhere to this rising trend line. We're going to this is where the model gets a little fuzzy, is have we really burned ourselves out, and can they successfully get an ultimate reversal when the clock runs out, because this is their clock. Can we get a reversal at the 618? Like, can they keep price so suppressed that it's under $100 a barrel, which is a nice round number? And can we keep, price suppressed to the point where this is the ultimate reversal? So in other words, by the end of June, by when this candle closes at the, we might wick up into it and then close below, right? And the same thing with next candle. We open below and then we wick up, and our wick might get up a little higher. We might break our post-Iran war highs, but still be within a, do we hit the consequent encroachment of this wick, which we never did post-Iran, right? Is 115 a barrel the general upside target? But it's the same kind of thing as like what you see in natural gas, where like, sure, it's bullish, but like, man, we are going to be tested. We're going to be grinding our way up, even more so that we have this awkward monthly candle shadow. Like all the price action within this monthly candle shadow, which is really the majority of it, it's just going to be awkward. Like it's going to be, so depending on what your feelings are about the final target here, remember that Romeo only really predicts that price will hit the 50%, right? And then everything else is move your stop loss, and that's like gravy, right? So really it's just uncertainty in crude. And honestly, but despite the bullish bias, you really probably should be looking elsewhere. Don't just trade crude futures unless you're really, unless you see that price has been like kind of quote unquote over suppressed. So yeah, that helps explain why we might see a bullish weekly candle out of that wedge, and why this trend line here, this little baby trend line, might be holding, rather than just being, disrespected, right? That might be why. But then again, I mean, you might see like this might be a little baby 2023 model, in terms of like, that's the origination candle, we pause CRT, and then we find a reason to dump below, right? And these are all the games of price suppression. So yeah, so that's crude. Boy, I'm bleeding my videos. I'm getting too much into the planning the week ahead, and I'm not doing enough reviewing the week to be, but that's just the trader brain. You can't help but be forward looking. One more little piece here is Bitcoin. the quote unquote surprise in Bitcoin. I saw a lot of astute traders on X relate this to 2023, which is awesome. It's so funny how fractal everything is, and how like you get Jungian synchronicity when you start journaling and you start reflecting. That creates you see how fractal reality is. But I'm literally about to review the 2023 Bitcoin launch, that one of them that Romeo predicted. It's not the 2023 lows that they were referring to. So they were referring to these like late 2022 into 2023 lows, which this right here was the analogy that people were using on X, is they were saying that between like this down close candle with these many weeks of low volatility and then bang, a huge bullish candle, how similar that was to this configuration, like fat down close candle and then volatility completely dies off in massive accumulation, and then surprise, boom, big bullish candle out of it. Now the Romeo one that I'm going to review is this one. I think it's the one where it's Romeo versus ICT, which is awesome. I love it. I'm excited to review that video. But yeah, let's just really quickly look at this. So this is a ridiculously hard model to trade because you don't really get much of anything. Like, it's not really a 2023. I'll show you what it is. It's a turtle soup, right? And then from peak manipulation candle, let's get on the correct time frame. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So this one completely times out. So like if this is peak manipulation into distribution, we get another peak manipulation, right? And so it's so disappointing. You shouldn't really be looking for bullish 2023 models on this time frame, because on this time frame we're bearish. So here's where we're at. This is a tricky one. I might actually have to come back to this one. You know what? I'm gonna make a special video just to review this, because I need to I've been talking for about an hour now, and I need to get fully acquainted. There is a way. The way that you catch this move is the same exact way that Romeo caught. Where is it? This move. And there is a way to do it. There is a way to analyze this in a way that's more cogent, that makes sense. So I'll be back with that video and many videos to come. I'm excited. I'm going to be recording a lot of videos this weekend. So thank you so